Hello and welcome back to HCCH CODIFI Edition 2023 on CBDCs. And right now we're in conversation with Professor Seraina Grünewald. Now, Seraina is full professor and holds the chair of European and Comparative Financial Law at Radboud University in Nijmegen in the Netherlands. She is a member of the academic board of the European Banking Institute, a member of the Sustainable Finance Lab in the Netherlands, and affiliated as an academic fellow with the Interdisciplinary University Research Priority Program Financial Market Regulation at the University of Zurich. She is a well-known expert in the field of financial and monetary law with a focus on central banking, bank resolution, banking union, and sustainable finance, and is frequently invited to present at international and European authorities, including at the International Monetary Fund, the European Central Bank, the European Stability Mechanism, and a Single Resolution Board. Her research has benefited from the ECB Legal Research Program, as well as scholarships from the Swiss National Science Foundation and the Swiss American Society. Now, since 2020, she has conducted extensive research on the legal foundations of the digital euro, including reports commissioned by the ECB and the European Parliament. Welcome and thank you for joining us, Seraina.
Thank you so much for the kind introduction. Happy to contribute to this exciting project.
We're excited to have you on. Now, Seraina, you published very recently a wonderful, excellent paper, and the title of that paper was A Legal Framework for the Digital Euro. Now, this was an assessment, of course, of the European Central Bank's first 3 progress reports on the digital euro from a legal perspective. Now, in particular, we found that this piece made note of a significant change in the communications and project framing from the ECB. So a progression from the terminology of digital cash to, and I quote, an electronic means of payment, for retail payments. So an electronic means of payment for retail payments. Now, for our audience, could you give us a quick rundown of what this difference between digital cash and this electronic means of payment for retail payments is?
Yes, absolutely, of course. Now, this difference, this crucial difference, has to do with the level of ambition that a CBDC has or pursues. CBDCs as digital cash, they replicate all the functions of physical cash, that is fiat currency. They can be used as both a medium of exchange and a store of value. Now, a CBDC designed as an electronic means of payment, on the other hand, will be limited to that means of payment function, and its use as a store of value will be legally and also technologically constrained.
I see. That's actually very interesting because from the legal perspective, this actually has quite major implications for the development of a CBDC. We understand that states, of course, need to fully understand the functions that are built into the CBDC and how these compare with fiat money in banknotes or in coins. Now, our experts on our CBDCs project have begun exactly the similar kinds of discussions, and they're interrogating the exact nature of CBDCs as compared to fiat money or money adjacent things like cryptocurrencies. Now, perhaps it would help us if you could elaborate on this observation and tell us what motivated this change. So what policy objectives are being considered in this reframing, and what are the main consequences of this reframing on legal frameworks going forward?
Yes, absolutely. Yes, in the European Union, we did observe a reduction or specialization, if you want, of the digital euro to the means of payment function. And we can indeed observe a similar trend also outside of the European Union. Now, the rationale for this is economic. It's not a legal rationale. Central banks fear that their CBDCs could become too successful, in fact, that demand in the CBDC could be so high that it would undermine banks' intermediary function, that very important function for all our economies. Now, more concretely, if users would save their money in digital euro, instead of in commercial bank accounts, bank would lose their key source of financing, deposits. So what central banks are afraid of is that they would destabilize the banking sector and threaten the current system of coexisting public and private money that they think has worked quite well. Now, there are, of course, especially in academic literature, but also in policy, voices that would, in fact, like to see that this system changes. changes. But that's I think that would go too far for this colloquium to discuss. You also asked me about the legal consequences, what the legal consequences of this are. Now, the legal frameworks establishing CBDCs will have to give central banks the tool so that they can limit CBDC holdings to a level that they perceive as safe or economically optimal. Now, in the case of the digital euro, the European Commission's recent legislative proposal provides that, and I quote, the European Central Bank shall develop instruments to limit the use of the digital euro as a store of value and shall decide on their parameters and use. So the proposal does set some parameters. Holding limits set by the ECB must be designed to safeguard financial stability. They must ensure that the digital euro is usable and accepted as a legal tender instrument, and the ECB must respect the principle of proportionality. But within these parameters, the ECB would be free to set holding limits, and it has in fact indicated that it would likely do so at approximately 3,000 to 4,000 digital euros per user. So a fairly low level of digital euros that we would eventually be able to hold. Now, users would still be able to transact payments that exceed these holding limits. I think that's important to add here. Under a so-called waterfall functionality, users could link their digital euro account to a commercial bank account. And when the user receives a payment whose funds are in excess of the holding limit, then these excess funds would automatically be routed to the commercial bank account. And vice versa, when the user makes a payment, additional funds could be pulled from that bank account to complete the payment in digital euro. So there are functionalities that would sort of work out the practical issues that come with these holding limits.
Well, that's actually really interesting, and thank you for the example, because it makes it very concrete to the user to actually see the amount of digital euros that could in principle be held, but also know that there's a functionality that goes beyond that. Now, if I may, you refer in this report to the possibility of digital currencies functioning under three main categories. So there is a means of payment, that's one, there's money, and there's this wonderful category called near money. Now, could you tell us about the distinction between these categories and why they may be legally significant?
Yes. We have already spoken about means of payment versus money. Money, such as fiat currency, banknotes, they have a storage function. Means of payment don't, or at least their storage function is limited to what is necessary to enable payments.
Yes.
Now, the reverse applies to near money instrument. Their main function is indeed to store value over time, while their payment function is limited. Think of money market funds or bank saving accounts. Now, the money stored in these accounts carries interest, so it increases in value over time. Now, the point that I'm making in my report to the European Parliament is that CBDCs should be designed as money-like as possible, also to avoid legal risk. In the case of the ECB, for example, it is questionable whether the ECB would indeed have the constitutional power to issue a digital euro that carries interest.
Right.
It is empowered to issue banknotes. But banknotes never carried interest, and they were never meant to carry interest. They're really money and not near money.
Right.
By the way, the recent legislative proposal of the European Commission now expressly excludes the possibility of the digital euro carrying interest, and rightly so, in my opinion.
No, absolutely. And that's actually a wonderful way of describing it. So near money is not money the way we understand fiat and banknotes and so on. Now, if I might just turn a little to the possible legal consequences of these categories, particularly for private international law, which is what the HCCH focuses on. Now, for example, it's an obligation to pay with central bank digital currencies, the same as an obligation to pay with money. And is that in all circumstances? Is there a legal significance of this difference, if at all? What do you think?
Yeah, again, this will depend on the precise design of a CBDC. Mm-hmm. What I can say is that for the European Union, the EU legislator is indeed looking to render the digital euro as interchangeable as possible with banknotes. So cash and digital euro would be convertible into each other at par, and mm-hmm. both would be given legal tender status. So okay. In principle, payers would have the right to choose to pay in cash or in digital euro. However, the legal tender concept that applies to cash and digital euro may not necessarily be identical in all circumstances. So it's quite a big however, in fact. The European Commission's proposal defines that legal tender of cash means first that it needs to be accepted on a mandatory basis, that it is accepted at full face value, and 3, with the power to discharge from a payment obligation. So a payee must not refuse euro cash tendered in payments unless the parties obviously have agreed on a different means of payment or an exception applies. Now, with regard to the digital euro, there is quite a wide set of exceptions that will apply to the obligation to accept it. This set of exceptions, for example, includes the right for a micro enterprise not to accept the digital euro unless it accepts comparable digital means of payment. That is, of course, meant to reduce the costs that come with setting up the technological infrastructure necessary to enable digital euro payments. But the European Commission could introduce additional exceptions. Member states are also empowered to adopt national legislations introducing exceptions. So, long story short, payers' right to choose to pay in cash or digital euro is in fact limited to cases where mandatory acceptance of both applies according to EU and national law. Now, another important point and another restriction to the legal tender concept when it comes to digital euro is the fact that there could also be restrictions on the face value of the digital euro through fees that payment services providers are allowed to charge. Now, according to the proposal, these fees should be objectively justified and proportionate, but in the end, they may entail restrictions as to this condition or this feature of the legal tender status of the digital euro.
No, that's actually an important point. I mean, because we're not dealing with physical cash. There would be, of course, different providers. Now, if I might, you mentioned just a while ago that, of course, member states are empowered to adopt national legislation and so on. And just looking at different jurisdictions, could you tell us what the implications are of different jurisdictions arriving at different functions or features for their national CBDC?
Yeah. There is, I think there is a very short answer to this. It will make the cross-border interoperability of these CBDCs more challenging. And it will certainly also enhance the legal risks associated with their cross-border use. Mm-hmm. So, for example, the legal nature of CBDCs will crucially depend on their design as account-based, as token-based, or something sui generis. Now, legal nature will, in turn, of course, determine how CBDC is transferred, and it will also have implications, for example, on settlement finality. Now, to give an example, another example, the design feature of holding limits, a very important design feature of CBDCs, I think, might also matter. Now, if one jurisdiction has implemented holding limits on its CBDC, cross-border payments to and from another CBDC may risk violating those limits.
Mm-hmm. No, that's actually very helpful to understand. I mean, interoperability is something that's so important. But maybe turning a bit to what the European Central Bank is considering. Now, the ECB considers distributing the digital euro through what they call supervised intermediaries. So, in that sense, users would only have intermediated access to the digital euro. Now, this system, of course, envisions a certain degree of interoperability for the different actors involved. Now, would you consider the use of a supervised intermediary the best practice, and if so, why? And in that sense, what are the implications for the legal relationships formed between users, intermediaries, central banks, and perhaps other relevant institutions?
Yeah, very important question. Thank you very much. Indeed, the Digital Euro proposal is based on the fundamental design choice to have the digital euro distributed to its end users through intermediaries. Now, this has the advantage that the central bank can outsource all user-related services to specialized private sector providers. Now, these providers, they would manage the digital euro user accounts, including all the onboarding, all the anti-money laundering related checks and so forth. And they would provide users with front-end digital euro payment services. The ECB's role, on the other hand, would be confined to issuing the digital euro, of course, and to providing a back-end infrastructure, including the recording and the verifying of all settlements of digital euros. The ECB would also manage these supervised intermediaries by setting up a granular rulebook. In fact, they're already working on that. There is a special team established to setting up this rulebook, a rulebook that would determine how participants can participate in the digital euro scheme. Now, cash is, of course, also distributed through intermediaries. And central banks do not normally possess the capacity and also the expertise to take on customer-related services directly. Now, for these reasons, I think it is fair to say that an intermediated distribution model for CBDCs has indeed become international best practice. Now, legally speaking, and I think that's what is mostly important here, this means that while CBDC is ultimately, of course, a liability of the central bank, users would not maintain a direct contractual relationship with the central bank. Now, that contractual relationship would be between users and their intermediary, at which they hold their CBDC account.
Right. So it seems that the intermediary is here to stay in that sense.
Yes.
So, having that kind of a system, that framework, and actually, as you've said, it might actually be good practice, best practice internationally. For our purposes, then, what private international law issues may be envisioned regarding the role of intermediaries in the distribution of the digital euro? So what questions of applicable law or jurisdiction might arise in relation to intermediaries?
Yes, a very important question. Now, the digital euro proposal limits the intermediary function to payment services providers according to to existing EU legislation, the Payment Services Directive, to be more precise. So only banks, e-money institutions, and payment institutions would be able to distribute the digital euro and offer the services that I mentioned. Now, this ensures that all intermediaries distributing the digital euro are adequately supervised, and importantly, that they're subject to a harmonized set of rules under an existing legal framework. So I think it was a very clever move of the European Commission and of the ECB to rely on that existing framework. However, private law aspects, and those are the ones that matter here. I'm thinking of questions of liability or duty of care applicable to the digital euro account relationship. They are largely left to the national law of member states where intermediaries are located.
Right. No, that makes a lot of sense. Yeah. If I may, something that you said actually kind of triggered this. You mentioned the interoperability and how important this is, in terms of the design and whether the design impacts on interoperability. Now, just maybe focusing on that for the moment. Now, which challenges do you think may arise concerning cross-border interoperability of the system implementing the digital euro? So if you imagine, for example, the digital euro being used outside of the Eurozone, do you see foresee any issues that might arise, and what would some of these issues be?
Yes. First of all, the digital euro proposal is, for the time being, quite restrictive in terms of use of the digital euro outside of the Eurozone. That has, of course, good reasons. The distribution to users in non-euro area member states is conditional on an agreement to that end between the ECB and the central bank of the relevant EU member state. And distribution to users in third countries is conditional on such an agreement between the union and the governments of that third country. Now, especially in the latter case, as you can imagine, the conditions for such an agreement are onerous, and they're quite unlikely to be met, or at least met easily. Now, amongst others, the third country would have to ensure that its central bank abides by all rules and guidelines issued by the ECB, that it has adopted legislation in line with the rules and standards of the digital euro, and that its intermediaries are regulated and supervised in a manner that is equivalent to EU standards. So unlikely to happen in the near futures. Now, to be more substantive, I think two issues would likely be key for the ECB or the EU overall to ensure in such a setting. The first issue would be that holding limits are also observed outside of the euro area. Otherwise, of course, holding limits applicable in the euro area could just be circumvented. And the second issue is that it's the EU's privacy standards would also have to be observed outside of the euro area or outside of the EU. That has a more political background. In citizen surveys that both the Commission and the ECB conducted, it was revealed that privacy ranks amongst the top desired features of a digital euro.
Oh, wow. Let's maybe stick with that topic of privacy for the moment. I know your report notes in some detail that privacy is a domain where the use of standard banknotes will differ, of course, necessarily from the use of CBDCs. Could you maybe walk us through which designs are being considered for data privacy in the Digital Euro project?
Yes. CBDCs will not clearly not be able to offer the same level of privacy as banknotes do, namely full anonymity. That we won't have that. We won't see that with CBDCs. But both the ECB and the Commission have assigned great importance to the privacy aspects of the digital euro for the reasons that I mentioned, and they have indicated that the processing of user data should be minimized. Now, according to the Commission proposal, users should be able to make and receive digital euro payments both online and offline. So there will be an online functionality and an offline functionality of the digital euro with different implications for privacy. Mm-hmm. Now, the claim is that the level of privacy of digital euro offline payments would be similar to that of payments in cash. The ECB and private intermediaries would not have access to user data except related to the funding and defunding, that mm-hmm. is the depositing and the withdrawing of money on a device such as a mobile phone. The level of privacy in digital euro online payments, on the other hand, would be comparable to that of other online payments. So private intermediaries would have access to a broad range of user information. Arguably, in order to comply with regulatory requirements, think of sanctions, screening, and anti-money laundering related checks.
No,
so
absolutely.
These are the two worlds that we will live in.
So that's actually really quite interesting. Just for our purposes, do you think any private international law issues would arise in relation to the protection of personal data or the transfer of data in circulation and the use of the digital euro in cross-border transactions?
Now, in cross-border settings within the euro area, I would not really expect issues. The proposed digital euro regulation and the general data protection regulation of the EU, they will both be directly applicable in all member states. However, I'm not a data protection expert, but I would assume that it is unlikely that the EU would accept that lower data protection standards would apply to the use of the digital euro outside of the EU. So that would really be a condition for the EU to enable or to participate in cross-border schemes that would enable, CBDC payments across borders. Now, this is particularly true when it comes to the risk of public authorities. For example, for central banks systematically surveying the payment behavior of individual users.
Mm-hmm. No, I think that's really quite important, but we of course have to see how developments go, and I think you're probably right. I mean, the EU has certain standards that will also apply to the digital euro, and we look forward to seeing how this would then play out. Now, while we have you, in your report, you have also concluded that the introduction of the digital euro and its requisite infrastructure requires the operation of several legal bases. Now, what developments would you anticipate as more states and more regional economic integration organizations begin to solidify the legal basis for CBDCs? And I'm asking in the context of the HCCH, of course. Now, the European Union is a member in its own standing, together with the European member states, of course, of the HCCH. And we'd like to see if you have any insights you can share with us on how the work that we're doing at the Hague Conference on Private International Law would be able to assist in developing a unified or at least a harmonized international legal framework.
Yeah, very, very good question. Very good point. Thank you so much. Now, my take is that if we want to achieve international interoperability of different CBDCs, and there is good reasons for us to at least try to achieve that, I think, we indeed need to achieve interoperability, certain interoperability between different legal regimes as well. So I think even though we may not achieve it immediately in the short term to set up the entire infrastructure for that, we need to think about how our legal frameworks could enable such interoperability in the future. So these features need to be built into the legal frameworks that are being developed now. Now, whether we will ultimately end up with a unified international legal framework, that remains to be seen. But what is clear is that the private law aspects of CBDC have remained notoriously understudied. This is also true for the euro area, where different national private law regimes will apply to the digital euro, to its distribution, and to any digital euro services provided by intermediaries. Now, the mapping of potential private international law issues that could arise in the context of CBDCs and their cross-border use by the HCCH would be hugely beneficial, I think, for the ongoing debate on rendering CBDCs interoperable. Surprisingly little, I must say, is known yet about where potential stumbling blocks may lie.
No, thank you so much for that. I mean, it's also nice to hear that the work in relation to, if not a unification, but a harmonization of frameworks across the world, cross-border, would be something that's useful, and that the work that we're doing here hopefully can contribute a little way to that. Taking a lot of your time and also your insight and expertise. Thank you so much. It's a privilege to be speaking with you today and to have your insights to the work that we're doing. So thank you for being with us.
Thank you for having me. It was a huge privilege on my side as well.
Thank you so much.
Good luck with your important work.
Thank you. For our audience, again, we just had the privilege of speaking and be in conversation with Professor Seraina Grünewald, the full professor and the chair for European and Comparative Financial Law at Radboud University in Nijmegen in the Netherlands. Join us for the rest of today as we speak to more experts from across the world talking about the private international law implications of central bank digital currencies. Stay tuned and watch this space. Thank you so much.